All right. Good morning. Been a good week here. Again, staying with the process. You didn't have to read all about, this person and that tourist and this person and that talking about where oil was going to stop going up or where it could fade or where it could fall, whatever. Top end of the range had a 77 in front of it, still does, and we're heading there. So what you do with that is called an immediate term trade over bot signal. So you sell some. I'm actually going to take oil and energy stocks to my minimum, and I'm going to reload on some longer term treasuries. So TLT. I've had a lot of questions on like, would you buy it? I don't know why I have so many questions. I mean, it's pretty straightforward, right? I'm buying bonds. It's not like I need to say it louder. Maybe I just did. Like, this isn't some old wall shop where you're like, pound the table. No, it's just the capital allocation process is based on math. Just settle down. It's okay. Oh, but your inflation nowcast ticked up. Yeah, that's why bond yields went up. Okay, so we're good. We're good to go. You got it, right? And on the other side, short some bags. Bag 7. Yesterday, like 28% of the stock market's move on the S&P 500 came from 3 stocks that are bearish trend. My fave would be to short Tesla here, which we reviewed on the call yesterday, followed by Amazon. And then if you're brave enough, NVIDIA. But all 3 of those are bearish trend. NVIDIA has to close above 186 to change that. Both Amazon and Tesla rate near the top end of the risk range. It's never going to be perfect. That's not what the game is. But again, executing at the top end of the range within bearish trends. And by the way, Apple also broke trend yesterday, and Google remains bearish trend. It was down in an up tape. So you got all that is called the Bag 7. People love me for calling it that, don't they? That gets so annoying. But we're going to keep saying it as long as it's true. All right, no Bennett this morning, so we'll jump right to BLC.
Good morning, Keith. So we had the Brown-Forman reported yesterday, but after I spoke on the call. So I just want to hit on that real quick because it's a short of mine. BF.B is the ticker. So they beat by about 11 cents, 58 cents, but it was about flat to last year. Organic sales increased by 1% year over year, but it accelerated from down 2% sequentially. So that looks like it might be better. And this is a stock that has pretty low expectations, but things changed when they said on the call that they do plan on liquidating aging barrels that in the coming years that were produced when the costs were a lot higher and costs spiked. But even though they said that, they also expressed this that their concern about gross margins being down more than 150 basis points was misplaced. Even though they said that type of comment, that sent the stock down yesterday, and I'm still short it. And one of the big reasons here is the industry is sitting on 13 years worth of inventory in barrels, not even in bottles yet, and that's just puts them in a really tough place because consumption is down as well. So the only way out of that is really to discount, and the company's really adamant about not discounting, so it's just going to show up in sales. So one way or the other, that inventory is going to impact them. It's either through gross margins or sales. They say it's not going to be gross margins, so then it's going to be sales. So that's why I'm sort of still predicting that this is going back on your short signal.
That is a prediction that would prove to be accurate instantaneously now that I look it up. Brown, the Brown? I don't drink the Brown anymore. No, the Brown. You want to be short the Brown. Have you seen any demographic or any work from Neil or any work from BLC on that matter on alcohol consumption and the rates of change? And more importantly, if you're my age or older, how much different that is for people like Bennett or people that are younger than BLC and I, right? So again, all these trends are called secular slowing, okay? So no, you can't replace a bottle of Brown with AI, but you can also not, you cannot get rid of the inventory is the point. And this is a very good one. This is also a good example, BLC, of your sector, the sector style is in favor now for quad 3, but the single stocks, if they have long-term secular problems like this one or Diageo, which is both booze, right?
Yep.
It doesn't matter what the sector thinks. The stocks are going to do what they're going to do. And I say that, 6 ways to Sunday, but get the single stocks right. I did this podcast with this guy from Milk Road. It was fun. I'm like, look, it's not about where software bottoms. It's about where software revenues reaccelerate. Okay. If they continue to decelerate, we're going to be short them. If they accelerate, we're going to be long them. So that's that. So again, you can be short Brown-Forman, Diageo, Bag 7 stocks, and long Pepsi and Philip Morris on the other side. And that's how we'd be set up, or that's how our long-only accounts are set up. We do have a managed account business if you want to see the signal strength stocks that are the strongest out of the 95. I just mentioned two of them in PM and PEP, and we made PEP top 5 most actionable yesterday. So we'll do the Brown today, BFB in the top 5. All right, what else you got?
Oh, and the last thing is wanted to flag that CASY may be added to the S&P 500 later this week. So just be positioned for that in either way if they don't get it. But I think there's some speculation that they will be added.
All right, cool. That's another signal strength stock. Please mind your signal strength stock list. Again, 95 names on that. They do change, but you can see the value in identifying those quantimentally. So again, it's the quant signal plus the research work. So if the analyst likes it and the signal likes it, it makes it to the list. If the analyst likes it or loves it and the signal doesn't, it doesn't make the list. That's it. Right? You can love your kid all you want, but maybe they're not going to play today. Okay, we're playing at the highest level. Thank you, BLC. Appreciate it. No, I don't think we have Jenkins either. Is in London doing meetings. Bennett's doing meetings. We've got everybody doing meetings because we're not in earnings season for the better part of earnings season's over. But that does not mean that there's not there are not things to do. Just keep on your watch list. By the way, BLC, I bought for the fam. I bought some wheat yesterday. Right.
Okay.
So some wheat and dry bulk shipping, BDRY, these are all they will eventually become inflationary on the cost structure of companies you follow, and you know how to play the short side of that. All right, wheat's been in a bear market forever. All right, thanks. McGough, we jump right to.
Morning, Keith. I'm up in Toronto with McGough today.
Oh, look at that hotel room, Luke. Did you get a nice proper Canadian breakfast yet, or what?
Not yet. Looking forward to that after the call.
Good.
Yeah, but I was gonna.
Just don't wear a Leafs jersey. Put a bag on your head if you have anything Toronto Maple Leafs.
I do not have one. But I was just going to hit on Burlington, ticker BURL, which is an active long of ours and also a signal strength. And this just wrapped up the off-pricers Q4. And, all three of these companies just put up great quarters. So Burl had an EPS beat on better top line and margins. Comp came in at 4% versus 2.8 estimates with 60 bips beat on gross margin. And, this quarter calmed some concerns over Burlington last quarter. Its comp, really underperformed the group, and management called out warmer weather. Last quarter, Burlington sells a lot of coats, and the warmer weather was not, driving sales at the stores, but, called out, good exit rate, leaving that quarter. And, looks like it was true. So, comp was 4%, accelerated 300 bips on a 1 year and 400 bips on a 2-year average. These companies always guided Q1 comp to 2 to 4%. They're lapping, a flat comp last year. And, we think this can probably comp mid singles, the high singles next quarter. Gross margins being driven mostly by merch margin, had a 60 bips benefit on the quarter, and part of their Burlington 2.0 strategy, their turnaround strategy, is a better merchandise strategy, which we've been seeing a lot of gross margin improvement, on the merch side. So, going forward, if this company can continue to comp as a good setup, and they're taking down stores from 80,000 square feet to 27,000 square feet. And they're a lot more productive boxes, and they continue to improve their assortment. SG&A gets levered and even path to a 10% EBIT target. But, theme is off-pricers still, very strong.
All right. See how he's he's developing, right? He was a rookie on the team. Now he's not a rookie. He's starting to use these, not an acronym, right? I mean, you're like merch. I mean, it's something. I think it's something Ariana would say, but it's like a term for the sector, right? What's merch?
Just like their assortment.
Yeah, merch margins. See how you're sending some people to the golf course in Florida today with some serious knowledge, man. That is awesome. Appreciate it. Enjoy Toronto. Say hi to my friend Jim if you see. I'm sure you're going to see Jim and amongst our other top clients in TO. So, and for those of you on the call that want to learn something really good, all right, if you're an American and you call it Toronto, no, that doesn't sound very bright. That's not street smart. It's Toronto, okay, Toronto, like TRONTO, like Toronto, like Tonto, okay, you got it. Thanks. All right, thanks, man. Tom, I got a stock I want to buy that's on your list. Can you guess what it is? It's a little early for Tom. I think you might have. You might be going to Tom. We don't have Emily today, so I hope Tom got the memo. Tom, paging Dr. Tobin. Well, somebody on the team text him. Tell him that he just missed the bus. All right. Thank you. Appreciate it. Healthcare team. Steiner, are you on, or we got Coop?
No, yeah, it's still me. I think it's the earliest I've ever gone on the call here this morning, but hopefully Tom gets the memo if he has anything to say. But I've got a
the
couple
most
things.
actionable stock I was going to say on healthcare, if he doesn't come back on, sorry to interrupt, Coop, is going to be Cardinal Health, CAH. So again, if you have a managed account business at Hedgeye, you saw them buying it yesterday for you. That's what happens every day. There could be a change in the top 30 signal strength stocks out of essentially the top third of the current 90 plus stocks that we have. But again, it doesn't have to. You know, there are plenty of days where there's no change to the top 30, but there was yesterday. And what you're finding is that the names that have rolled out of the top 30 are names that Coop covers, you know, financials, consumer discretionary names that McGough and Luke, you know, who just talked, covers. And the names rolling in are, you know, lower beta, healthcare, consumer staples, like we talked about Pepsi, and Cardinal Health is about pretty much as boring as it gets, all right? CAH. We also have on Tom's list TXG, which is 10x Genomics. That's sexier. Now, if you need sexy because you're one of those types, like you need a lot of juice. Well, we got some juice. No juice on the long side from you though, Coop.
No, no juice, but you know, sometimes boring is good. It's like golf. No pictures on the scorecard, right? But a couple of things that I wanted to hit on today. It's maybe good that we have a little bit of extra time, but first, you know, just kind of on labor, you know, had a little bit of divergence here between just kind of the headlines and the underlying data. And I think Christian's done a really good job of sort of contextualizing this in some notes. But you know, yesterday, Morgan Stanley announced that they were going to lay off 3% of their staff, and that's mainly in investment banking, wealth management, asset management. You know, Block obviously cut 40% of their workforce last week, and you know, got more layoffs from Amazon. And all of these are kind of suggesting that AI is and efficiency gains are sort of reducing the need for white collar employment. But you know, at the same time, the data itself has actually been pretty strong. You know, in Christian's note yesterday, like ADP employment came in at a 7-month high. ISM manufacturing employment came in at a 13-month high. ISM services employment came in at a 12-month high. So there's all these headlines that AI is, you know, taking jobs. The Centrini report last week, at the start of last week, you know, caused the market sell off on Monday. But you know, aggregate employment momentum is still, you know, holding up for the most part. And the kind of cherry on top this morning, not that it's super telling of actual job losses, but the challenger job cuts number came in at negative 71% year over year, after an 117% year over year increase in January. So, you know, the data itself is looking pretty resilient, but the headlines are what's sort of spooking people. And as that relates to, you know, a couple of our best idea shorts, I mean, like you said, there's no juice on the long side in the financial space, but there's a lot of juice on the short side, which we've been, you know, kind of pressing into those shorts. You know, in terms of our proportion of longs versus shorts, we're very heavily skewed to the short side. So, you know, we've got like Capital One, COF, Synchrony, SYF, Ally Financial, ALLY, and American Express that all kind of trade on credit expectations and consumer health. And so, you know, if you have these headlines and small signals of, you know, potential labor softening or income uncertainty, it would have, you know, pressure on these stocks. And so it's kind of why we have them on the short side and why they've continued to go down. And then I guess one other thing.
It's also, by the way, if you're looking for a fundamental reason to buy TLT, you know, Coop just gave it to you. It's called labor. So if all you do is focus on one leg of the stool, when, you know, the quads are not one thing, right? The rates of change of growth and inflation, and what we're talking about is a deterioration in the employment picture due to stagflation and AI, both of them. right? War is not AI. That's the stag part, and the inflation part, stagflation, or that's the inflation part, and the stag part is what Coop just reviewed. So eventually the street will get there, like, oh yeah, labor's deteriorating. I listened to Danielle about that. It's like, no, you just looked at the charts. I mean, it's rate of change data. So, yeah, I mean, we do get a lot of questions, by the way, on these financial shorts. It's like, well, yeah, and all the guys on Twitter, they're mostly guys that are tweeting like, well, look at how much short interest there is in software. Look at how much short interest there is in financials. Not one of these fucking guys, and they're all guys, not one of them called these sectors on the short side. They can all tell you when it's got to stop going down, just probably because they're long them. But they have no, I mean, just ask the guys that got you into the short. We'll get you out of the short. We're the only people that get you out. So again, short Visa, MasterCard, you can go down the line on this stuff. I mean, it doesn't have to be, it doesn't have to be that difficult. I mean, is there of the top, like if you look at these, I don't know, I got 15 or 20 of your names on the short side here. Like what would be like in the top 2 or 3, like in terms of like, okay, the signal's bearish because I gave it to you, but what fundamentally is like what are the 2 or 3 most concerning financials right now on a longer term basis?
I mean, on a longer term basis, it sort of depends on, how long we're really talking here.
Well,
Because
that's for hedge fund guys, that's like next week, but let's go with for the next 2 quarters.
Yeah, I mean, for the next 2 quarters, like, I think that these consumer names are still at like, threat in the short to near term. I guess, short to near term is a subjective timeline, but in the next 2 quarters or so, I would say that the consumer names are still kind of at risk, especially with shallow quarterly quad 4 coming in the second quarter. And there are some, I guess, tailwinds from like a tax perspective for consumption, but the K isn't it's only widening, right? So yeah, I would say
to me on that, like if I take that answer, I'd actually go with MasterCard or Visa. These are like because what I want to short are people's bags. Like if you want to tell me Visa and short interest are these wackadoo high short interest stocks, I'll just tell you what you are, which is full of shit. I mean, these are widely held names that people have gotten smoked in that they're still not out of because they're index components of consequence. Those 2 stocks are just flat out scary.
yeah, those are and the kind of, this was one of the case studies in our whole shifting of our position monitor, is like those are 2 of the laziest longs of all time in the financial space. Like everybody, everybody owns them and no one shorts them. And, we've had them on the short side and they've been really great shorts for us. So I think it's been kind of an eye-opening experience for not only like us and as a team, but also, our clients who have followed our process and have actually, either gotten out of these positions or, turned around and shorted them.
Yeah, you can ask Sam Rahman how many years he owned those 2 stocks, and if he does now. I mean, and you either change or you don't change. Like you either are a changing money manager or you're not changing. I had some dude on Twitter like give me the token. I've been doing this for longer than you, and I can tell you that if you don't respect the people that I think are smart, all this bullshit, right? It's like, I respect all human beings. I do not respect their process. Are you kidding me? Like, the process to pump and dump? No. How about the process to bag and hold? Like, so that they get their fees? No. Like, no. Okay. Read the Bible for God's sakes, man. Like, that's like straight up, the Pharisees are in there. It's not like everybody out there is a saint because they're your buddy running money. I mean, come on. Wake up. Wake up. We're good here. So of the 2 top 5 most actionable, pick one, Visa or MasterCard. Is there any way to delineate between the 2?
Yeah, there is. And actually, I think it's interesting. Josh had mentioned it. We were kind of going back and forth when that Citrini article came out last week. And like, they really laid out, they went through a bunch of different tickers, actually a lot of tickers on our list, and just where the risks are. And I guess they obviously do something like very similar. They have slightly different, geographic exposures, but both are primarily based in the US. And the one thing that I guess differs between the 2 of them is that Visa has, they're a little bit further ahead in the stablecoin kind of race. And so that actually poses as an advantage for them over MasterCard in the longer term. And it was what we were kind of joking about was that they had highlighted that in that article, and on the day when everything kind of sold off, MasterCard was down more than Visa. So it was like it showed that the market really did move on that note. But that's kind of the main difference, I would say. I don't know off the top of my head which one has more kind of cross-border exposure. I think it's MasterCard, but the businesses operate pretty similar. But I would say if I had to pick one of the two as on the short side, it would be MasterCard.
See, that's where I'm going to use the fundamental analysis, right? So let's put MasterCard in there. We'll pick one of the two dogs. Go pick out a golden retriever. Go to like a high-end breeder, and you got to pick one. Right? I don't know that many people that pick two puppies. I mean, just pick one. They're similar sets. They have the same fractal pattern. They're both golden retrievers. Unless the breeder's lying, they are who we think they are. Okay, so okay, good. We got that on the short side. What else you got? Anything?
I guess just a little bit more kind of commentary around the Genius Act. That's recent from both Eric Trump and Donald Trump. Just a lot of political pressure. Kind of Jamie Dimon spoke on it on Monday, how he's kind of anti the sort of he wants like Circle, for example, if they're going to act like a bank and give yields to the people who are holding USDC, they want them to be regulated like a bank. So they're pretty against that, and it's for right reason. It's a huge risk to a big part of their business model. If this gains more traction, it would put pressure on bank funding and deposit pricing, and which for like JP Morgan, Wells Fargo, all these banks, it's a pretty big longer term headwind. So that as of right now is still somewhat noise, but it's happening. The stablecoin demand is very prominent. We saw that in Circle's most recent quarter, and obviously we've elevated that off of our best idea short on the short list on the digital asset side. And it's pretty clear that it's partly because people are selling their Bitcoin and they want to hold their money in their wallet still and just put it in stable coins because they don't want to cash out of their accounts. But it's also just the fundamental kind of use case for stable coins is pretty prominent, and so that's a risk for some of these banks, or a lot of these banks.
I think that's I'm laughing because I mean they're I find humor in tickers, right? I mean I live a relatively unexciting life, but the I'm laughing because Circle is the only bullish trend signal in our entire crypto tracker product, okay, which is extremely accurate, that product. Mm-hmm. So Circle, and what is the narrative? What's the narrative? Is it Pump's going to go buy the coins? Eric's going to tell you about the coin? No, it's because people are shitting their pants because they did what Eric Pump did when it was getting pumped to the all-time highs, and they're going to what their version of cash is, USDC, yep. Right? So that it's the shitting of the pants trade. That's what that is, right?
That's a good way to put it.
Let's put Circle in the top 5. Actually, we should have highlighted that. That's the whole thing about the process, right? All you have to do is review the risk range sheets on all of crypto, all of macro, essentially, on 2 different places. You got to pay for it twice, and then right? You don't know what you really know. Like if you're that old wall guy that's like, I've been doing this for 50 years. Actually, I'm not more scared of one person than that person if they don't know what the quads are, if they don't know what my signaling process is. You're frightening. You know how some people, like, they have that dad who's like really scary? Like those guys, right? Living in Braintree, Mass, chirping at me on Twitter without a name. Get out of here. It's free week. Good morning, by the way, Steve-O. What else we got? So we got Circle, we got Matt. So that's bullish trend. Okay, so it stands alone for now. It's the shitting the pants trade. We got that on Emma's going to put that in the notes, and that won't pass JP Morgan's compliance. All right. What else you got?
It's all I got for me today, but macro awareness can get you a long way.
There he is. One of the young Jedis at Hedgeye. Love that guy. All right. Coop sits right across from me. I'm lucky. I'm learning every day. These guys keep me young. All right. Where are we at now? Van Skyver, you never age.
Yeah, no, I'm aging. I will say if that 50-year experienced guy were your Uber driver, that would be the most dangerous thing. You'd worry then. Like, oh my God. I'll just flag two things. I'm in Toronto for meetings today, but one, we got Fastenal February sales. So Fastenal is an industrial distributor. They originally started selling like screws, but now they sell everything that an on-site store in a factory would need. And these are worth noting because they are an acceleration in what was a pretty good January, and it's in the face of some weather hurdles. So like it's probably a sign that February industrial activity was pretty good, at least on the demand for these kinds of products. So overall, it accelerated to 13.3% year over year versus 12 in January. Part of that is just tariffs, right? So the tariffs in April of 2025 come in, so these comps get a lot harder as we get into the second quarter. But it is, nonetheless, not a bad print, right? Like that's some decent volume underneath there, and their employee headcount is actually up about 2.5% year over year, and really the growth was across all the different verticals that they report. Like they have manufacturing, but non-res construction is one of them, and that accelerated to 19.9%. So we talked a little bit about why construction really kind of independent of a lot of things kind of has to get better as we push into the year, partly because you're just having a shift because of weather into later months, and partly because you have the lag effect of the already happened decline in interest rates. So a little bit of support for that there. So, just noting Fastenal is a really good operator. There, there's a little bit of sort of idiosyncratic benefit to the way they run the business and sort of engage with their customer relative to like an MSC Industrial, which is, I think, a little bit lazier. But that is just sort of worth noting when you get like everyone's here is sort of talking about the ISM being better, and it's like, yeah, okay, well, we see that in other places too. And then the other thing I would just note is that
by the way, before you keep going on that, tying it back to the model, our GIP model, back to that question I had way back when from a new macro client saying, well, why do the PMI and ISM GDP models not work? I'm like, what are these models? I don't know. I don't care. I do know why they don't work, but I don't care to get into that this morning. We're at like 47-month highs on new orders, like CapEx, et cetera. You still see people like, oh yeah, it's clearly the economy was slowing. No, actually all the data is going to accelerate in January and February. That's called quads 1 and 2. And then, Jay, the likelihood of it slowing from there, the better that these numbers were in February, the more likely of a sequential slowdown in March, correct?
Yeah. Oh,
we had a shitload of snow. They even closed schools here when it wasn't snowing in Fairfield. I mean, it's.
Yeah. I think there was a certain. I mean, you don't have to listen to that many, 4Q earnings calls to know people were excited about the potential for tariffs easing after the Supreme Court IEEPA decision. I don't think a lot of people had Iran more on their bingo card. I think people were hoping for sort of a year with fewer tariffs, one big beautiful bill, and slightly lower interest rates to kind of reignite the what was the term? Animal spirits or something like that in the industrial world, which honestly, there's no animal spirits in the industrial world, but they're kind of rational capital allocators. And they have been, scared for 47 months or whatever the exact count is. It's been a really difficult run since sort of the peak. It was very, irrationally exuberant probably in 2022. But, over that, next 40 months, it's been sort of a grind. It's been really kind of dead. And, this was sort of a moment where it looked like it was going to get a lot better. And I think from an industrial activity standpoint, like tariffs now look like they might actually end up being a little bit higher than they were pre-IEEPA Supreme Court decision. And you have, more geopolitical uncertainty, not less. And, if you're an industrial allocator, you're going to look at that and think, I don't know, maybe not, right? Some of the stuff is hard to turn off. Industrial activity tends to breed industrial activity. So if you get a couple of months of good ISM, the likelihood is you're going to get another one, but it can certainly decelerate into the second quarter or the second half. So that's something that is definitely worth being mindful of, and is, I think, really useful to have that macro themes deck to kind of map it out.
Yeah, I mean, it's essentially and identifiably essentially, identifiably, mathematically. They better have that last word to say the other two words. You know, it's that the peak of rate of change growth in the U.S. economy was in the first quarter, and specifically January to February. After that, you get decel. We have decel to quad 3 in the month of March, and then we have actually a decel on a quarterly basis to quad 4 in Q2. I even had like a client who's followed me forever goes, "What? The quad 4's there?" I was like, "That's been on the page for a while, dude. It's a shallow quad 4, but it can become deeper. It's not like there's no. That's the whole point, right? You're Bayesian. You're bean counting these numbers every day. As oil goes to 77, our inflation numbers go up. It's not like it's some static assumption. And ISMs, by definition, because they're diffusion indexes that require a human input, you know, they will most likely just say, yeah, it's less good than what it was in January and February. Is I guess we're agreeing to agree on that because that's what my model says.
Yeah, no, I mean, I think it would be a very rational expectation at this point.
Yeah,
and it's mathematically where we go.
Yeah, and then we'll go to Hedgeye Live, and I'll have different people, speakers, say, "See, I told you the economy was slowing." I was like, "Well, you missed the entire fucking acceleration." But let's keep going here. Anyway, should people buy? Why should people buy fire trucks? Are fire trucks going to be disintermediated by AI?
Yeah, I mean, I think there's still always parts, like there's always something to buy. There are always parts of the industrial economy that have certain cyclical dynamics or fleet dynamics that are going to result in better orders. And I think, yeah, certainly Oshkosh, PACCAR are probably still in that category. And, you know, but when we have when we took FedEx off, right, like that's like a pretty classic sign. That's one of the ways a large cap liquid volatile name that gives us good alpha in moments of acceleration versus deceleration, right? That's a pretty standard move.
Yep. I got Oshkosh at the low end of the range. I also have ITW, by the way. I don't know what you'd say about that.
Diversified manufacturer, sort of classic cyclical. They make a lot of food service equipment and stuff like that. But that is definitely part of it.
Yeah, I think a big part that people missed about tariffs, certainly the government types and definitely the political types that hate everything about Republicans and Trump and tariffs. They forgot one thing. It increased the rate of change of corporate profits. When you get to take price on your customer, no, it's not good for your customer if the customer's going to pay a higher price, but it's good for the person selling it to you if you have to buy it. Okay, so just think for yourself because you can do this. You know, tariffs were the catalyst to accelerate the industrial production cycle and the corporate profit cycle embedded therein on the cyclical side. That's just a fact, looking backwards. So, you know, again, go back and review, like if you're shitting, like again, the other shit your pants trade was in April of last year when we finally got out of the short side and went long. You know, when everybody was poopy in the pal pants, including he himself, about tariffs, that was the bottom, right? Cyclical bottom. Anything else? Nope. Nothing else, Jay? You're good? Sounds like it. All right. I guess we're already at Friedman.
Fernando.
Oh, Fernando. Oh, there we go.
Morning, Keith. So as we keep following the events out in the Middle East, some things that are looking good for oil, some things that are looking bad for oil. On the Iraq side of the equation, they're saying they're running out of storage because of the disruptions in shipping lanes, backing up the Basra terminal. Probably have a few more days to build up inventory unless we can free up more movement through the strait. The strait's are running around 10 to 15% of its usual traffic right now. So clearly detrimental to some of the large producers, especially Iraq and Kuwait, that can't reroute a significant portion of their oil through different directions. Similar with Qatar and the LNG side of the equation. I think that's probably an underappreciated portion there, that the LNG itself, especially in Europe, is likely going to see another inflationary push here. TTF is already over 50 euros a megawatt hour. And we are still towards the tail end of what is depletion season. We're going to start refilling inventories towards the end of March, and it really picks up in August. That's when we could see a very significant increase in prices if there's still meaningful disruptions in supply. But then on the positive side, the attack on Fujairah was not as significant as was first feared. And that, as I mentioned, you can move about 1.5 to 2 million barrels a day, which is about half of the UAE production through Fujairah past the strait. And just to put this on some actionable names, I saw today on the top 3 things, you talked about trimming some of your oil exposures because it's at the top of the range. I think the oil beta names are probably similarly following that track. So the Fangs and the Devons and the Matadors are probably something you'd consider trimming here. We still think there's another appreciated part on the LNG side that may play out, and even in petrochemicals, which is kind of a split ball between Jay and I. But the petrochemical side of the equation, U.S. petrochemicals specifically, names like Dow or LyondellBasell or LIB could benefit if the spread between oil and U.S. natural gas stays relatively wide. So just a few extra names to keep in your radar screen. And also worth mentioning, you had a long one, Norway. Norway is about 20 to 22% of its GDP's oil, so that might be another one that gets trimmed.
22%, baby. You're long of Nordic skiing and oil there. Talk about winning right now. Those two are the 2 biggest trends in the world, from athletics to markets. The Klaba, what's his name? Klaba? What I was going to ask you about was, I got asked about, you didn't by chance see that podcast I did on the Milk Road, did you?
I did not, no.
Yeah, that's probably saved yourself lifetime. But I don't do many podcasts, but I will do a podcast if they have a good audience and a good somebody who can carry the water on the conversation, obviously. And this guy did. John was excellent. But he asked me about the Strait of Hormuz. And he's like, I see here on Hedgeye, there's some comment from us on the Straits of Hormuz, and, like that being like a traffic jam, I think is what we called it. I don't know if you called it that or Neil Howe or who called it that, if Nate called it that, but like I had to comment on it. And I found myself like, just thinking while I'm answering the question, because I know what I'm going to tell him. But I'm thinking, a former self would not answer the question this way. My former self would come up with something that's like, I'd have done some research on it. I'd have asked you about it. Who's done a lot more research than I've done on it. I'd come up with some kind of narrative on, the risks of the Straits of Hormuz being closed for a prolonged period of time. And instead, I just said, I have no edge on that. Like, if you just want people to talk about what everybody else is talking about, that doesn't generate alpha. If anything, it does if you're fading it. So like, what do you think about that? I mean, these types of things they become such a meme. We're in such a super short-term meme chasing lemming type world, but on something that you actually know, right? Like, what would you have said about that? I mean, my signal, by the way, is probably going to be the first thing to tell us that the Straits of Hormuz are opening up.
But I've always said when you data mine like that, there are hedge funds that would literally rent helicopters to fly over the Permian to count the number of frac spreads there are. And I'm not going to have that edge. I think the edge that we bring fundamentally is having a broad view of the world and understanding the mechanics and the dynamics of how they operate together. Obviously aligning the signal to how that's going to affect in the very short term and where there's good risk reward. And then I think another one is being very good at deciphering balance sheets and seeing off balance sheet risks, which is something we were going to cover on some of the other names. That was more useful when oil went through its bubble period. Now with oil having been in the 60s to 80 range for the past 5 years, a lot of those opportunities have gone. But I'm sure we are only a few years away from having another oil bubble inflate and having some frauds to look at too. But obviously there are bubbles in other parts of energy that we'll be able to also investigate now.
Yeah, I mean, back to the helicopters and hedge funds example. That's a thing. And Eric Pump knowing because Don gives him a buzz is a thing. Like, everybody knows that they know. So why don't you just believe in math instead of what you couldn't believe anyway? You're not going to fly a helicopter over the Straits of Hormuz. Try. I'd love to see you try that. And actually, I wouldn't. That'd be terrible, right? You can't just go for a helicopter ride over the Straits of Hormuz right now, can you, Fernando?
No, I wouldn't advise.
That would not be good to get in the succession helicopters and fly from New York in and around there to check it out. No. So if you believe what the market believes, and all of humanity at this stage, I think, is trying to believe what it actually means in AI, then you would believe that other people have information that can be captured by my signaling process. The entirety of the signaling process is based on that notion. People have inside information and they act on it with real ammo. Okay? If you don't know that, like you have to understand that as a starting point. Okay? It's like Bill Belichick was allowed to spy on after he got cut every single game on everybody's practice. Everybody would know that. Well, yeah, that's going on every day in markets. So that's why our signal's been so accurate, Fernando. I had like a phenomenal call with a new client yesterday at a major hedge fund where the guy that runs the place tasked him with basically mining me. Like, he was trying to, really get into like how I calculated fractal dimensions and how I think about, fractals in general. Actually, it was an awesome discussion because I'd still say less than 20% of our institutional clients even ask me questions about fractals. In fact, I had one the other day say, oh, so it's just technicals. I'm like, no. No. Fractal math is not a 50-day fucking moving monkey, okay? Like, that is not tech. That's old wall technicals. I can tell you about astrology. I think on this day, way back when, Copernicus's book was basically put in the index of banned books for life. I mean, yeah, people have subscribed to, everything from everything and anything that they can believe, but I don't think people really appreciate until they finally do the power of the fractal dimension and the power of fractal math in my signaling process. I could just tell by the line of questioning I get, and moreover by the line of questioning I get when it's a different one. Like I told him, he followed up with some comments on an email, and I said, thanks, man. That's like one of the best conversations I've had all year. Like, it's great to see that some people that are running big money are really understanding the power of the signaling process. So this really helps Fernando. It really helps me with Fernando because we're not going to fly helicopters over the Straits of Hormuz. Okay? We're not interested. We have families.
And,
all right?
Anecdotally, one of my contacts in Abu Dhabi said airplane pilots are making a month's wage for one flight in and out of the Emirates right now.
Yeah, no shit, because you could die.
Yeah.
Yeah. You're not likely to die. By the way, another good friend of mine at a hockey game last night who runs more money than most people listening to this call, he got back from Dubai they left on Friday night. Yeah, his jet took off it was one of the last jets out before the bombs. It was Friday at some point. And he's got serious edge in the Middle East. And he was like, Western media is such a joke. Like, all you NBC, CNBC, you guys are full of shit. Everybody knows it. You get laughed at in hockey rinks. And this is like, you're getting laughed at. The whole world sees America, right now, and all of its, elite establishment glory that runs the media, and just sees it for what it's become, which is part of the fourth turning, sadly. And excitingly, it's great for us capitalists who are moving to the other side. All right. Thanks for that. A lot going on there. Let's put OSK in the top 5 most actionable. By the way, that gives us 3. That was the J. Van Sciver idea, the fire trucks. They make fire trucks. They make like aerial system, you have to like get up onto something to like clean a window. You can't use AI to do that yet. You got to use a squeegee. All right. Aerial platforms, squeegees. Nice. They need those in Dubai too. And they have to rebuild some of these buildings. Okay. Friedman.
Yeah, good morning.
Are you entertained?
Hey, squeegees wasn't on my bingo card for this morning, but I'll take it.
Have you ever squeegeed, like, have you ever done that job, like at an industrial complex, squeegeed, or a commercial complex, squeegeed their windows for a wage, an hourly wage?
I have not, but I've definitely squeegeed windows.
Okay.
Yeah.
I've done that job, and it's a good learning experience. And what you find with squeegee people, and this is essentially you and I are aligned on this. Like, everyone says, oh yeah, they work hard and they model things. Yeah, I've seen a lot of people do squeegeeing outside of Port Arthur Motors in Thunder Bay, Ontario. A lot of people that work terrible job squeegeeing. When you can't do simple jobs well, I don't trust you, because you're lazy. You lack attention to detail. I'm not saying you're a bad human being. I'm just saying that I don't trust you. I trust myself more. Okay? I trust Friedman. If somebody's going to model something, I'm going to ask Friedman to model it. I'm not going to go ask some dude at Morgan Stanley. And I love our clients at Morgan Stanley. But I'm not going to ask them to model what Friedman's modeling for us. So anyway, go ahead. We had a nice little counter trend bounce that I'd sell into in a lot of your names.
Yeah. Excuse me. Sorry. I just wanted to hit on Roku really quickly. They were at the Morgan Stanley conference, and Anthony Wood, who's their CEO, who doesn't do a lot of appearances, but he was there, and he spoke, and it was interesting to hear him talk, especially around the Howdy streaming service. Now, maybe this is because he's directly involved in this, so he's kind of talking his book, but it was interesting to hear just how excited and positive he was on it. And so for those of you who are not aware, Howdy is Roku's ad-free but low-cost new streaming service that they launched for $2.99 a month at the end of last year. And it looks like it's gaining some pretty decent traction based on some of the data and surveys that we run. And it lines up with his bullishness. Now, to be clear, this isn't, we're not saying like Roku's going to be the next Netflix. So let's just kind of pump the tires on that for anyone who knows Roku and is getting too excited about it. But when we think about Roku's install base in the US, about 60 million active accounts, when at $2.99 a month, just some modest penetration rates can actually really move the needle in terms of revenue. So if we think about 3 to 5% of the Roku subscriber base subscribing, you're talking about 65 million to 110 million of annualized revenue, which on a, call it $4 billion $4.5 billion platform business is it's still small, but the point here is that a couple hundred basis points can really start to add up and matter a lot when you compound that, and you're also thinking about all the other initiatives that they have in place. Also, when you're thinking about investors' expectations around call it this 18 to 20% revenue growth rate, if it does start to scale faster, that's certainly a positive. It also gives them, I think, latent pricing power as well, to the extent that engagement's pretty high. And again, they're going to be rolling this out not just on the Roku platform, but also across other streaming platforms as well. So you're going to be able to subscribe to it even if you're not a Roku customer. Which I think there is a product market fit here for a low cost ad-free streaming service, just given how expensive a lot of the other services have become as they continue to raise price and try to grow profitably. So just wanted to hit on that one specifically, because I still think that for Q1 at least, the revenue growth is we got the guide already, right? So they guided to 21% revenue growth. But as far as Q2 and Q3 goes, there's still events that are really important that I think are going to help drive revenue growth, including the World Cup. And then you're going to also have political spending that's going to ramp up later in the year as well. So I still think that, call it 20% growth rate on the platform side is the most likely outcome. And if that's the case, they're going to continue to beat as the rest of the year goes. And, hopefully based on the pod trajectory, and also the free cash flow generation, which is meaningful, that, the stock continues to work, or well, the stock will work from here, right? I mean, it's outperformed the rest of the internet and media space. It's still down year to date, but the rest of the complex is down, a lot more than that. To your point, Keith, on kind of counter trend bounces. So sometimes just not being down as much as everybody else is alpha in when markets are down broadly in a specific sector. But anyway, I'll just leave it at that.
Yeah, not being down as much, I'm not a fan of that. But,
Yeah, no, I know. Yep.
But I hear it. Our clients have to do that job. If I wanted to do that job, I'd do that job. I'd prefer to do my job, which is generate alpha and absolute return without drawdowns and crashes for the sake of being in a sector that is getting absolutely nuclear reactions like software, for example. I don't have to be in that business. So I'll just go to cyclicals for and energy stocks until I'm not. Then I can come back. But how many companies do you have that are going to show revenue accelerations, year-over-year revenue accelerations? Do you know off the top of your head? I mean, it can't be that many. I mean, it's not like stocks just infinitely go down just because they're going down. Oh, it's it's just it's all macro.
In Q1 specifically?
Yeah. Eventually, the stocks will go up if they show a revenue acceleration. I mean, the baskets can be sold up until people start to get inside information on those quarters being revenue accelerations.
Yeah, I mean, there's 3 companies that just stand out, and that would be Roku. Meta, and Google.
Yeah. All right. The signal's got a real problem with Google right now. That's not new today. So I don't know what you're going to eventually tell me about that, if anything changing at all. But the signal says something material is changing at Google.
Yeah. No, I've been paying attention to it. The thing is that the comps are the easiest for Q1, and the cloud business is still scaling, and we have really, a decent catalyst calendar with their cloud conference coming up here, in the next couple months. So I don't know. The data looks good. So there could obviously be, to your point earlier around like insider information, people trading on things. Like there's obviously things that I could be missing, even though I usually catch a lot of them. But I'm not seeing anything that would suggest that the pods or the fundamentals are going to roll over here in a really big way. There could be some concern around, competition from ChatGPT and the release of the 5.4 model that's coming up. That being said, they just released 3.1 and it's Gemini 3.1 Pro, and it's a really good model too. So I'm not sure that would really be a big reason for it. So, maybe it's, and I'll pause after this, but it could just also be just concerns over hyperscaler CapEx and the broader AI trade just, being heavy. And, Google is now starting to, trade heavy as a result of that. But the fundamentals should be fine for Q1 at least.
Yeah, the number one reason why it's going down has nothing to do with what you're talking about. It has everything to do with positioning and flows. That has more sellers and buyers is the answer. Okay. And the machine can be a massive seller of that exposure that triggers fundamental sellers eventually or not. But then once you get into the pods, I asked you a question about pod 1 revenue growth. What comes to mind to me is that the inside information might be in pod 3, which is capital allocation, CapEx versus free cash flow, that they may throw up another huge number for Q1 on CapEx when the street's hoping it starts to go up less. I mean, why wouldn't the stock stop going up on good numbers, right? But not good CapEx numbers. They spent way more than you thought they were going to spend. Not more than the market. Well, anyway, the
revenue growth rate on the cloud business was also we were above, and that also came in much better, right? So the fact that they're doubling their CapEx, but they're growing their, cloud business over 100% in terms of backlog. It's not like you're just spending on
getting
nothing.
it for,
Yeah. And actually, I misspoke before. I should have clarified. I don't know. They're, just given what's going on in the Middle East and the conflicts, we talked about this earlier with like on the week with RPK. What we've seen, Keith, like time and time again, and I've said this a million times on the call, right? We've been through this. Whenever there's some type of geopolitical flare up, to the longer it occurs, right, and then if gas prices continue to go up, that does eat into demand and it hurts the low end consumer, which filters through to the ad market almost always. So that could also be what the signal and everything is sniffing out, is that maybe Q1's fine, but do we see, to your point earlier, like a pod 1 deceleration or faster deceleration potentially in Q2, because there's a little bit of cyclical pullback in digital advertising spend as a result of what's going on globally.
Yeah, it's a good discussion. Put Google in the top 5 most actual, just so that people have the notes how to think about it. Like how I make the decision is I go with what I said first, which is what has nothing to do with what Andrew says, which is the flows, the fundamentals, i.e. my signal. That captures that. So that's number one. That's the number one thing that I'll go with. Number 2, I'll go with the quad. That's the last thing he talked about. And again, it's not a throwaway. It's a decel. That's what quad 3 does. It decelerates discretionary consumer spending, advertising, spending dollars, et cetera. Right. Then number 3, it's an open question. Is the market, if those 2 things are negative, going to say you had a good revenue acceleration, and at the same time, we're going to put up with these CapEx accelerations? Currently, the answer to that is sell Google. I have no problem 1 week from now, when all of you that are listening to this for free aren't on this call, and I'm always on the same part of the merit. By the way, I'm going to be late for the macro show because there's an accident on the merit. I can come back in 2 weeks or 1 week and say the opposite of what I just said, because I'll start with the signal being the opposite if that were to happen. And that's how I do it. Okay. That's not how I used to do it. And if you do it how I used to do it, and it sounds critical, it's because I'd be critical of myself doing that way too. I'd be losing money. So don't do that. Think better, think differently, use your edges, understand when you have a really talented analyst like Andrew Friedman that it only adds to your ability to raise the probability of getting things right. Because getting things right in this business is really fucking hard. It's not like so easy some bozo the clown like Josh Brown can like tell you what stocks to pick, the best stocks in the market. I mean, it's so stupid I can't even talk about it anymore. Anyway, thank you. Got to keep going here. But Google top 5 most actionable. Guys, do we have 4 or 5? Somebody just ping me here. Jose, or is it Felix?
I have a couple of things, Keith. So first,
there he is.
Mentioned.
We like it when you jump on.
Well, I've been on, I think, pretty much almost every day today. But so Jensen mentioned at a conference that this will probably be the last round of financing for OpenAI and Anthropic.
Really?
So
Where do you say that?
This is the reason why all the AI names soared yesterday. And because I told you before, financing means IPO financing, everything is related here. It gets all these mega deals that have been announced. People have been worrying what percentage of that is actually going to go through. Well, IPOs will definitely help. So that's the key reason why the AI names soared yesterday. The second thing I want to mention is we're doubling down.
By the way, Felix, but just sorry to interrupt, but back on that Friedman discussion, there's another reason why Google could be going down, is that people are going to replace it with Anthropic, on an IPO. I mean, people have a choice, right? They have to make room in their portfolio for things, and Google would be the donor of market cap on that front. I interrupted. Keep going.
So a second thing, so we're doubling down on a key part of the memory super cycle, which is NAND and storage. We are already long Samsung, which has almost tripled since we turned bullish last summer. We actually added Samsung to the top stock picks yesterday. It was good timing as it bounced back hard last night in Korea after a sharp sell-off. However, I do anticipate the volatility in Korea will continue because of supply chain concerns surrounding Iran. So to double down, 2 days ago during the market plunge, we wrote the clients of adding a name called Kyosha. Kyosha is a Japanese-based memory producer who specializes in storage devices called SSDs, which actually use these NAND chips. It's already had an incredible run, but we feel more could come because of our very tight distributor checks on NAND demand and pricing, which has turned out to be quite bullish. We also mentioned in that note an Apple angle that could help Kyosha as well. The ADL also did a 10-to-1 stock split, extremely rare and unusual. But I like that. 10-to-1 stock split usually gets the retail crowd liking that. So far so good on that idea, but I wanted to just mention that one. That's it.
Yeah, lots going on. Lots going on in that big global technology picture. If you don't have South Korea and China in your picture, you got the wrong picture, okay? And South Korean stocks were up over 9% last night. It's like, oh, but they were down. No. Well, actually, they were down because, but they were up. I mean, it's not like, I think Micro Marco Calanova or whatever his name is, he had one good down day in South Korea to celebrate, and then he got smoked again. But it's what it is. Until it breaks trend, we would be buying dips in Dr. Cosby, up 9.2% on the day. I mean, that'll leave a mark. All right. That'll leave a mark. Micro Marco. How you doing there, Glencher?
Good. How are you this morning? How's the accident? Hope they cleared that for you.
They have not. Yeah. It's free week, so people are going to be like, I can predict it, proactively predict. Well, it's not on. It's not working. The link's not working. Yeah. It's like, no. We're just not live yet.
Yeah. My son's not on the merit today, so it can't be him.
Sacred Heart University baseball player. If you want to go watch the Glencher, the real heat, go watch your son.
He's at Georgetown now, but
oh really? What the hell?
Yeah. We'll talk about
money?
that.
You get some minute.
Yeah. But anyway, a lot of his buddies out at spring training. Some of them are going to make the big roster, so it'll be fun to watch.
Oh really? That's awesome.
Oh yeah. So anyway, there's a lot of fight now happening on the refunds. We thought that would happen. And the Trump administration is dragging their feet on the refunds. The Court of International Trade ordered them to start the process to pay. We're talking about as much as $170 billion. And interest is accumulating at something like $700 million a month on these refunds. And, they're resisting it. The administration will likely file in the Court of International Trade to try to, delay the process, if not outright oppose it. Trump doesn't want to pay the refunds. It's a lot of money, and he's made a big point about how much revenue it has raised. And again, one of the arguments, and we talked about this right after the Supreme Court decision on those IEEPA tariffs, is they could make this argument. I think it's a loser, but it could lead to some litigation. It was raised in amicus briefs in the Supreme Court, which is they could say that in the executive order, it said that they are, implementing the tariffs under IEEPA and the laws of the United States. So that's real vague, but they could come back and say, well, there's other tariff laws that, justify the imposition of the tariffs. And we'll just say that we were relying on those, like Section 338 of the Tariff Act or something. I think there's big due process problems with that. But again, they don't seem to want to pay the tariff refunds and are dragging the process out. And again, it's a huge amount of money. It is potentially an administrative nightmare, but I think we're going to have a conference on Friday, the judge in the Court of International Trade, to get clarity on what is happening with these refunds. And the administration is going to have to lay out more clearly what its position is for why it is not paying the refunds, if in fact it is going to oppose or further delay paying them. But right now, they're under an international trade court order to start the process. And I think we're going to find what the theory is for not paying, maybe a little bit more detail on it, and at the end of the week. So huge amount of money that's all tied up, and thousands of companies now, seeking refunds.
Yeah, one of the key features of the fourth turning, Paul is alluding to every morning, is that America is run by lawyers. Whether you believe that or not, I mean, Scott Besson will use every legal loophole he can find with every single section of things you've never heard of to say whatever he wants. So our country, sadly, is run by lawyers. It is, again, not the free capitalist society that we used to be part of. And if it was, you wouldn't need the PPT, the plunge protection team. I don't know if, actually, JT or Paul, can you guys give me an assist on this? I have people asking me if the PPT is really a thing. What the hell? I mean, again, that's called market manipulation for the sake of, or painting the tape, making the market look better than it is because you can. I mean, you guys have any comments on that, either of you? Or do you want to just a lot of people think it's a third rail. I get it.
I'm actually trying to look it up right now.
Come on. Well, actually, Paul,
Yeah.
Is it legal for the U.S. government to do that? It is. Ask the lawyer. It is. It's legal.
Well, I'm not going to, you know what? Being guilty of being a lawyer myself.
That's why I'm asking you.
I'm not issuing advisory opinions on that.
Okay. Well, do a little bit more work on it. I can almost guarantee you that it is, in the way that they say that they can do it, it's legal. Okay. Now, I'm not agreeing with how they do it or why they do it, but I'm telling you that they do it. Okay. And it's not just, obviously, it's every administration that figured that out.
And now you vexed me. Now I've got to spend some time on this. Yeah. So first,
seriously, JT. I mean, we know you don't. We know you're not a macro guy trading markets, but you got to know what the PPT is. Okay. You're gonna have a lot of fun, by the way. Enjoy it.
Thank you. One comment on Freebird and just political spending, real quick. The Texas primary this week was over 122 million bucks, right? Just for a primary, one race. So Freebird, we should talk more, but we're looking at a record or banner year in political ad spending. Shifting to the conflict in the Middle East, Keith, if you try to strip through all of this, all of the noise, and you talk about noise constantly, and there is a lot of, as you said, NBC types and people, that non-Middle East experts, and all these folks weighing in, does feel, if you listen to some of the military types and the folks that we're in contact with, that we do have air superiority, that we're headed toward naval superiority. Doesn't mean they're not weak spots and weaknesses in what we've established, but overall, directionally, it feels as if the walls are closing in. Plenty of risk out there, plenty of opportunity for a screw up, something to get through. There's another series of articles about the U.S., our missile defense and all of our missiles being depleted. Folks in the know assure me that we've got a stockpile, that we have plenty. Do not listen to the naysayers out there that say that our munitions are depleted. Of course they're depleted. We've spent time back in June of 25 in the Ukraine and other conflicts, but there's plenty to back it up. One of my favorite stories is, we're talking about AI and Anthropic being used to assist this campaign. Real-time targeting, et cetera, is really working well, apparently. My favorite story is something called Lucas, which is a low-cost drone, Keith, and it's modeled after Iran's Shahed drone. And so someone at CENTCOM said, I think, quote, they took the Shahed drone back to America, made them better, and fired them right back at Iran. My favorite story yesterday when it comes to some of the defenses. So again, feels as if the walls are closing in. We still don't know who the leadership is. There's still reports that Khamenei's son might come out of this. I suspect he's in hiding right now, but he has a massive target on his back. So at some point, we'll do another call with McCausland or Smithson before the weekend or on Monday again. The War Powers resolution in the Senate failed yesterday. It will fail likely in the House. It's irrelevant, but there is now talk of the administration asking for 50 billion in a defense supplemental, which is something we'll be watching closely in the coming days and weeks. Yep,
All
that's
right,
it.
lots going on there. And again, yeah, can you hear me still?
Yes. You're breaking up a little bit, Keith, and I think we just ended the call.